Watching the India focus, here's a look at Indian markets just ahead of the open, which is happening in about a minute's time. Looks like we're setting up for a positive start. Rupee, meanwhile, still hovering around those record lows. And market watchers say Indian stocks could see as much as 20% upside this year, and that's as investors bet on the upcoming Modi government budget to boost consumer spending and infrastructure building. For more, let's bring in our Asia equities reporter, Ashutosh Joshi. So, Ashutosh, what's the mood like among Indian equity investors right now?
Yeah, hi. The mood in the Indian equities market obviously remains overjoyed. The index has already gained, the Nifty index is already up 12% this year, and Bloomberg survey of market participants showed that the index has potential to end this year with a gain of 20%. That would be something similar the index did last year. The last leg of this rally is driven by large companies. We have seen firms such as HDFC Bank and Reliance Industries surging to their peak levels, while at the same time we continue to see a sharp rally in smaller and mid-cap stocks as well. So overall the sentiment remains bullish.
So are there any signs of worry at all in the market, or is it just a bullish sentiment all the way?
Yeah, there are some areas where some market participants sound a bit cautious. The Nifty 50 index, which is India's benchmark, is trading at its most expensive level in last 2 years. It's back to it's nearing its peak expensive levels. The index is also trading at overbought levels, which sounds some caution on the technical side. But on the macro picture, the investors are still optimistic that this rally has more scope to go ahead. With the elections now, the key event of elections over, the focus is now on budget, where robust macroeconomic situation allows the government to spend more on boosting consumption, which is an area that it will prioritize, as well as infrastructure building, which remains a key focus for the government.
Well, we've seen a bit more regulatory scrutiny recently, particularly around brokers. What are the key takeaways from this?
Sure. India's markets regulator SEBI has sounded caution in some aspects of the market in recent months. It started with caution over flows into small cap mutual funds, another area where valuations are overheated. We have seen a commentary from the regulators as well as government about retail participation in the derivative space. And earlier this week we saw the regulator asking exchanges to fix the discount brokerage system, which essentially hurts some of the biggest brokers in the country. These measures are aimed at sounding some sort of caution over the market, and that is a takeaway from here.
Yeah, we do have the market rising at the moment in the early going. We're up about 10% now from last month's sell-off just before the election. Do things look a little overbought, perhaps? Is there a risk here of a pullback?
Yeah, if we look at the technicals, what are indicating, there is a scope for the rally taking a bit pause. But based on our survey of participants, looks like the market is pretty confident that by end of the year, there is scope for further rally. And this year could match what we saw in 2023.